You are listening to chartingwealth.com for Wednesday, the 7th of March, 2018. First, thanks goes out to all of you for making us. We just checked the metrics. We're in the top 10 in the world for stock market podcast. We're in the top 5 for stock trading podcasts. Thank you so much for tuning in every day and making that possible. We so appreciate it. We'll continue to pump out this information and try to help you become master chartists. That's what it is all about, because my friends, if you can read a stock chart, the world is your oyster. So every day, 10 minutes, that's all we ask. Practice with us. Learn how to read these charts, and it can be your key to everything you want from life when it comes to finances. Now, let's jump right in and see what we see going on so far with the markets. Everything up for the day, up just a little bit on the S&P 500, a little more on the Qs, just barely on TLT 20-year bonds, and quite a bit on gold. So let's look first at the S&P 500 as depicted by SPY, the exchange-traded fund that tracks the S&P 500. We see that we had a weekly vertical crossover going down all the way back on the 9th of February. The market then was up the following week some, slid sideways. We never had an entry point back then because the market took off on Monday and moved up that entire week. Then up some more the next week, sliding sideways. Then what we saw the following week, ending the 2nd of March, was a doji, which pretty much a doji means indecision as far as candlesticks go. And again, remember, we're using the Heikin Ashi candlesticks. That means average pace in Japanese. Great training there. You hear us talk about all the time. 64,000 people have taken it. It's available at our YouTube channel and at chartingwealth.com. And we see that so far with the new week, we have a down candle, our first stronger down candle that we've had. Derivative oscillator still barely moving down. The price percent oscillator still headed down, not at the same sharp angle it was the prior week, but we continue to see a down candle. And again, remember, it's only the first 2 days of a 5-day candle. What do we see on the latest candle? Remember, we had the last candle end on the 5th, and this latest candle ending, on the 6th, it will end on the 7th, but this is just the first day of the latest candle. It is a green up candle pushing through our weekly trend line. And remember, we're still in a confirmed down move on the 2-day chart since it crossed over going down back on the 5th of February. So things slid sideways for a while, and then we had some strong down movement on the 2 prior candles. But we do see a green up candle forming so far. Hasn't finished forming, just started. We still have another day, and as we tune in a little deeper to the 4-hour chart, we can see it does appear to be retracing and may try to cross over going up. It pushed through and then fell back under the weekly trend line. So let's keep an eye on that and just see what happens as the markets open and start moving on Wednesday. But we did have that crossover going down and a potential jumping in point. Things are pulling back now. However, when we look at our larger charts, we see that again, the 2-day chart, the PPO, price percent oscillator, is moving sideways, heading up just barely, pretty much a sideways slide. And as we look at the weekly, which is the big chart and the big trend, it is still headed down. So again, keep your eye on the price, pay close attention to what's going on all these charts, because my friends, it's all the charts all the time. Now we're going to go back to the weekly, take a look at the Qs. It was up for the day 0.42%. So far we have a red open box candle, not the strongest red candle, but again, it is red at the moment after the prior week ending the 2nd was a green up candle, not as strong as the week on the 23rd of February, but again, we have 3 weeks of up movement after that slam down on the 9th. We see that the price percent oscillator is still negative, but it's sure trying to move over, crossing up. Hasn't done that yet, trying to recover where things originally started down back on the week ending the 9th of February. Derivative oscillator is losing some of that downward momentum, and it looks like the price percent oscillator is trying to move up. As we look a little closer at the 2-day chart, we can see that we had the derivative oscillator flip to the positive, to green, back on the 2-day candle ending the 5th. and it looks like we have a bounce off, and again, just the first day of the latest 2-day candle, but it looks like the blue price percent oscillator is pulling away from the red signal line, and once this candle finishes drawing, we may very well have a crossover going up in the opposite direction of the weekly chart, so we will keep an eye on that. We look at the 4-hour chart. What do we see? This is the third, I guess 2.5 days of up movement as far as the 4-hour chart goes. And again, hasn't crossed over yet, but may be doing that in the morning. So keep your eye on things, both on that 2-day when it finishes drawing and the 4-hour. It's where we are on the cues, is trying to backtrack, and we will just see what we see. Again, a lot of sideways sliding momentum. And the problem is when we have those kinds of motions and we don't have a lot of real trending, our oscillators just don't work that well, and we cannot trust them on the charts with the kind of movement we're currently seeing on the cues. Okay, couple more minutes with you, actually about 3.5, and we'll try to push through the rest of these charts before we run out of time. On TLT, the 20-year bonds up 0.09%, just barely. Are bonds bottoming out? They could be, particularly if stocks are starting to move up. Remember, bonds accelerate when they accelerate down when you see stocks moving up. And again, if we have stocks start to move up, maybe we'll see that down movement continue, but really we've seen a sideways slide for the last couple of weeks on bonds. We had a green doji for the week ending the 2nd of March, and so far we have a red up candle, and again, could end up being, well, it's really a spinning top back on the 2nd of March. But so far, maybe a spinning top that's forming for this week. We'll just continue to watch. It is red, though, means indecision tending down. Now, we did have, as we look at the 2-day chart, we did have a 2-day vertical crossover back on the 5th, but what we really have, again, is sort of a sideways slide. Up for the day, again, on Tuesday, just barely 0.09%, and it's just the first day of the latest. Derivative oscillators gaining energy, price percent oscillator heading up. As we look at the 4-hour chart, you can see up movement in the morning and then a pullback in the afternoon. So again, just keep your eye on things. We've got that sometimes when the market's sort of herky-jerky and not really feeling its way, you will end up having the schizophrenia between the weekly and the 2-day moving in opposite directions as they are now on the 20-year bond. So just keep your eye on things. We want to find some good trending at some point that can get us into either an up trade or a down trade. We'll wait for the markets to figure things out and tell us what to do. Why? Because we're trend followers. We are not forecasters, right? Okay, and that's the safest and the most profitable way to be. Now we're going to go from the 20-year bonds, lastly, to gold. What do we see going on gold? Well, derivative oscillators flipped over going down, but gold, the price percent oscillator, really heading sideways, and we see that so far the candle on gold is forming a spinning top or maybe even a doji. Indecision tending up, and it was up for the day 1.08%. And again, gold is still in a confirmed up move and has been for quite a while on the weekly chart. 2-day chart actually is in still a confirmed down move, but we see that the latest candle with that strong up movement, and again, it's just the first day of the latest 2-day candle, it is moving up, large green box pushing through the down trend on the 2-day chart. And again, the weekly chart still moving up. And of course, we've got the down move on the 2-day, the up move on the weekly. Again, the same schizophrenia that we've had, that we continue to see also in TLT. And again, we just got to wait for the markets to settle out for us before we can find a trade there, unless you want to see things working again on gold when it comes to our 4-hour chart. And of course, gold did trend all right for us with the last couple of movements on the 4-hour chart. Actually, we can go back to 3 decent movements all the way back to right there at the end of January, after we had a little bit of trending that was difficult for us to jump in. But with this latest pop-up in gold, we'll see if that up movement does actually continue. Did pop up strong in the morning, continued in the afternoon, and hopefully, when we get through, again, watching this, if our 4-hour chart continues to work for us, of course, as we've talked about in the past, we can use that 4-hour chart as a total trading chart. That's where we are as we end the day on Tuesday and go into Wednesday the 7th. We so appreciate you being with us. You have questions, problems, concerns, we're here for you. We love to hear from you. You can write us cw@chartingwealth.com. Thank you again for all your support in making our metrics look so good. If you're not already subscribed to Charting Wealth's daily market reviews, you need to, because that's where you get all the information we have to share with you, including links to our daily, weekly, and trade worksheets and all the new trainings and chapters of the book as they come out. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.